Obviously there are multiple assets that can benefit. Bitcoin, I think we would generally agree is like the best way to do it because it, you get the absolute scarcity mixed with the fact that it's a young asset. If it was just looking at relative scarcity, we would say, okay, gold's growing by 1.5% a year, Bitcoin's growing at less than 1%, and long-term grows at 0. So should we expect Bitcoin to outperform gold by, 1% a year? No, because we have a total addressable market in mind for what Bitcoin could be, or at least a range. And we think that a $2 trillion market cap is so small relative to what it could reach. So in addition to merely protecting against debasement, which is kind of what gold's doing, it's actually growing into whatever it's going to become. So I think that's the bullish thesis. Then I expect both from the scarcity dynamics and then the fact that it's the leading, liquid, secure cryptocurrency, and then it's better than gold in many ways. It's better than the bond market in many ways. It's as more people learn about it, the rational thing is for them, some subset of them to want to buy it. That I generally view as, yes, that's structurally bullish for Bitcoin.
Lyn Alden begins by emphasizing Bitcoin's unique combination of absolute scarcity and its status as a relatively young asset. Unlike gold, which has a stable but growing supply of about 1.5% per year, Bitcoin's supply issuance is shrinking, approaching 0 over time. This absolute scarcity is a fundamental differentiator that sets Bitcoin apart from other assets, as it ensures a finite supply that cannot be expanded by central authorities or miners beyond the 21 million cap. Bitcoin is still in its early adoption phase relative to what it could eventually become. As a result, it not only protects against inflation, but also has significant upside as adoption continues.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Obviously there are multiple assets that can benefit. Bitcoin, I think we would generally agree is like the best way to do it because it, you get the absolute scarcity mixed with the fact that it's a young asset. If it was just looking at relative scarcity, we would say, okay, gold's growing by 1.5% a year, Bitcoin's growing at less than 1%, and long-term grows at 0. So should we expect Bitcoin to outperform gold by, 1% a year? No, because we have a total addressable market in mind for what Bitcoin could be, or at least a range. And we think that a $2 trillion market cap is so small relative to what it could reach. So in addition to merely protecting against debasement, which is kind of what gold's doing, it's actually growing into whatever it's going to become. So I think that's the bullish thesis. And one way I kind of look at any investment is through the lens of market share and dilution. So if you're a holder of the dollar network, there's different instruments to do it. You can hold a bank account that pays you 0, a bank account in a smaller bank that pays you maybe 3%. Could be holding T-bills, getting a little bit more. And you have to compare that to like the structural growth rate of the dollar supply, or all monetary aggregate. So dollars plus, say, treasuries, for example. You can map it in multiple ways. And you always ask, is my share of the network, if I just hold, so factoring out my new income, because we're just talking about investing or saving, what percentage of the network do I have now? And in 5 years, will I have like less of the network just by holding and collecting any sort of payments I might be owed versus not? And so if you hold dollars and the money supply grows 7% a year and you get paid 4% a year, you're going to end up with a smaller share of the dollar network over a given 5-year period. And same thing with true as gold, except your debasement rate is something like 1.5% per year. But then you also have to ask, is the thing you're holding increasing its like market share compared to other things? So for example, someone could hold IBM stock and they're buying back shares. So you're holding a deflationary asset, which sounds good, but then IBM's getting its lunch eaten by all these other tech companies. And so the market share of relevant tech for any one IBM share is decreasing. So when I go back to Bitcoin, the main question I look at, okay, what are the monetary dynamics of the network? So we see the very low inflation rate and the hard cap and all that. Then the next question is is it the best at what it does, and will it continue to capture market share in its like industry or even adjacent markets? And I view yes. So as long as I see nothing on the horizon that I view as disruptive to that trajectory, then I expect both from the scarcity dynamics and then the fact that it's the leading, liquid, secure cryptocurrency, and then it's better than gold in many ways. It's better than the bond market in many ways. It's, as more people learn about it, the rational thing is for them, some subset of them, to want to buy it. That I generally view as yes, that's structurally bullish for Bitcoin. And the only time I might be more cautious on it is if it's, we get a crazy euphoric spike. You can look at different metrics like market value to cost basis or something. And then I say, well, okay, now I think it's going to go higher, but maybe it's going to take a 2-year break or something, right? So there are certain moments I could be more cautious, but as long as I think the structural things are in place, I'm bullish.
I mean, personally, I just think Bitcoin's kind of made for the times or something right now. I mean, I just look at the deficits and the fiscal situation. I've always said like one of the bearish cases for Bitcoin is like fiscal austerity or like responsible government spending. And so like a Doge coming in and a really competent treasury secretary who understands these dynamics, I would be like, that's kind of bearish for Bitcoin. But then you look at like the structural nature of these deficits and their problems, that the problem of the deficits accumulated over many decades. And I'm like, even these well-intentioned programs and, the smarter people can't really fix this. And so that leads me down to Bitcoin again. And so they're going to have to increase liquidity. They're going to have to come in and monetize these deficits. And so when I look at Bitcoin, it's like that's the purpose of Bitcoin. I mean, we talked about this on our last show. Bitcoin's like a mirror for these reckless government spending programs, and its monetary properties kind of allow it to do that, given its scarcity and its fixed supply and all these things that allows it to be really tied and correlated to the liquidity. And so I just think, and given how young it is and how it's still growing and it's still early in its adoption cycle, that's why there's so much potential opportunity, because not only do I feel like it's kind of built for these times and the value proposition is very strong, it's also very young. And so that allows it to have significant potential price appreciation as adoption continues to grow all around the globe. Because, I mean, we mentioned the US a lot, but the US is like in a better position than all these other countries around the world. And so Bitcoin is needed even more so in these emerging markets, with even more unstable fiscal situations and currencies. And so, yeah, I mean, obviously I'm bullish on Bitcoin, but I really think that it's kind of it's made for the times or something.
Alden underscores that Bitcoin adoption follows a gradually then suddenly pattern. While many corporations and institutions have been slow to adopt Bitcoin, each market cycle reinforces its legitimacy. Investors and institutions that have witnessed 3 consecutive Bitcoin bull markets, 2017, 2020, 2021, and the current cycle, are beginning to recognize its resilience. Initially, many dismissed Bitcoin as a speculative bubble. However, after repeatedly seeing it recover from downturns and reach new all-time highs, skepticism has started to wane. Over time, more institutions are reassessing their stance and considering Bitcoin as a legitimate store of value.
In any given big company, there are Bitcoiners. Like at the vice president level, there's a lot of people like that in companies, and it kind of doesn't matter until they're majority, right? So like if you have like 9 board of directors and like 4 of them like Bitcoin, it doesn't really matter until you hit 5, unless the CEO or the one with disproportional voting rights is the one that gets it. So if it's Fidelity or MicroStrategy, you can be super early because it's top down, whereas bottom up inherently takes a long time. But then it's like gradually and then suddenly. And I still think it's gonna be a minority of companies this cycle that do it out of the, of course, the thousands that exist. But they are popping up more frequently now. I think the accounting changes were a big deal. I think another thing is just seeing another cycle. So a point that I made before is that when someone sees like 3 cycles, not that there's been 3 cycles, but that they've seen 3 cycles, that actually matters. And for a lot of people, the first cycle they saw was 2017, And then, because most people have not actually looked at the logarithmic chart or of Bitcoin, or they discount some of the earlier small cycles as irrelevant. But the 2017 cycle, the 2020/2021 cycle, and now the current cycle is kind of 3 cycles of higher highs and higher lows that are all in public, really, if you discount those earlier cycles. And there's only so many times you can kind of say, well, that's a bubble, and then it's dead. Oh, that's another bubble, but that's only because of COVID money printing. And then it's like, oh, wait, it's back again, despite, high interest rates. You can only dismiss it so many times before you say, well, maybe I got to reassess. So I think that's another factor that's kind of mainstreaming it. And then I did a piece, I called it a new look at, what did I call it? A new look at corporate treasury strategy. And I analyzed kind of why this is relevant. And among assets that corporations can hold, there's kind of a hard cutoff, which is anything that you expect to underperform your equity, you can't really hold in scale. Like, obviously you hold cash, even if it's going to underperform your equity because you need some cash. But you can't just like unlimited stockpile gold, because gold historically underperforms U.S. equities, ironically, roughly by the dilution rate that it is estimated to have. And so you have to kind of cross the threshold of like, okay, what is like an asset that is, going to equal or exceed your own equity, that's not another company's security. And Bitcoin is kind of the only thing at scale that has a shot at that. So it's not an accident that's the asset of choice that these companies are turning to. It's the only thing big, liquid enough, not a security, and then actually has attributes that make it a good treasury asset, at least for part of your holdings. Obviously, the volatility precludes it being too big. If you're running, if you're trying to run a certain way, you have to have cash as well. But
yeah,
it's powerful.
I think that we're seeing this trend really pick up speed, and I think there's a lot of factors of why. I mean, I think the education level around Bitcoin has increased. I think the FASB accounting rule changes kind of help bring down the barriers for these corporations. I think the macro picture, I think people are just more aware of what's going on. And then I think we have a proof of concept. I think MicroStrategy, you can't look at that stock price and just ask yourself, what the heck's going on over there, right? And so I think all of those factors combined, I think you are seeing this trend. I mean, every single week you see a new company. Now, it's like, why is a company actually doing this is an interesting question, because there's some I feel like that are almost doing it out of desperation and they just want to pump their stock. I think a lot of them even just announce treasury strategies hoping to just get a little bump in their stock, because some of them announce like a $1 million strategy and then they haven't followed through with it yet. But then some really appear to understand it and are kind of following in the footsteps, like the Semler Scientifics of the world. Or I think Cooler Technology is another one that's come on the scene that he really seems to understand that this is a good way to preserve the wealth of his company and as a reserve asset compared to his other options.
Alden concludes by explaining why Bitcoin is uniquely suited as a corporate treasury asset. Traditional corporate reserve assets, such as cash and bonds, often underperform relative to the company's own equity. Gold, while a stable store of value, has historically underperformed equities due to its slow growth rate. Bitcoin, on the other hand, offers corporations a liquid, non-security asset that has the potential to appreciate at a rate equal to or greater than their own equity. This makes it an attractive option for firms looking to preserve long-term value while maintaining liquidity.